During July, the price of oil has actually traded to its lowest in 5 months. Now, I think this could be a really interesting trading opportunity in the week ahead. In this video, I'm going to go through some of the ideas behind the trade and some of the recent news and why we are seeing oil under pressure. Hello, I'm David Jones from Capital.com. I thought we'd do an update on oil, take a look at it, because it has had a bit of a slide over recent weeks and traded back briefly to where it was in February. So I thought let's catch up with some of the news and then jump on the platform, take a look at the charts and get a trade on. I think there is a trade here. I think there are arguments for either going long, buying oil, or for going short, going with this trend that's been in place. I know which way I'm going to go, but I'll talk through some of the reasons as usual in this video, then we'll get our trade on. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It means we can continue to push out lots of different videos on various markets throughout the week. And of course, every Friday at 2:30 UK time, I do a live stream direct from a YouTube channel. You can watch last week's now on the channel, but if you're subscribed with the alarm bell thing clicked, you get a message off YouTube just when we're about to go live. Right, let's get into it and talk about oil in a bit more detail. So just to recap, where we've been this year, incredibly volatile start, first quarter for oil because, of course, of the Russian invasion of Ukraine. So in early March, the price of oil was up 70% for the year to date. It'll be a massive move over a year, obviously, but not even 3 months into the year, that's where we were on the price of oil. It did feel, in hindsight, perhaps a bit extreme at the time. And we are where we are now. We're a long way off. We're, $30 below, I think, those highs seen in March. And I think it's going to be a long wait until we see those highs tested again. But perhaps more of that when we're on the chart. So what's the worry at the moment for oil? Well, the big worry is the same worry we have for all sorts of markets. Inflation. The concern is, will inflation and the central banks raising rates relatively much more aggressively, of course, than they have done for years, is that going to tip the global economy into recession? And if we have a recession, of course, then we're going to see, typically we'll see a drop in demand for oil. So oil can be a barometer for the state of the world economy. And I think clearly the nerves about what the world economy could look like for the rest of this year is putting pressure on oil. But the oil industry, OPEC, the oil producers cartel, is still warning of tight supply. So we're not seeing, demand massively outstripping supply, but OPEC is warning of tight supply. And it seems to be in no rush to deploy its spare capacity. If you remember, when the pandemic started a couple of years ago, we saw OPEC put production cuts in place to try and support the price of oil. So what OPEC does clearly does have an impact on the market, and it's still warning of tight supply. So I think that's why, even though perhaps the economy doesn't look too healthy over the next few months, we're not seeing a massive sell-off in the price of oil. Which brings us to the long-term trend. If we go back to a couple of years ago again, the April lows, the recovery that started then from about $10, $11 a barrel is still going. And this is why I think there's an argument for going long, because the long-term trend is up. But there's an argument for going short as well, because the trend over recent weeks has been down. And I do think, and I said it in the live stream last Friday, if we're looking for a surprise for oil, I think we're more likely to have a negative surprise that knocks it down 15% rather than a positive surprise that lifts it up 15, 20%. But so that's my view over the next few months. But where we are now, I do think there's a trading opportunity. Let's talk about the levels to watch, then we'll jump on the chart. So the low so far in July, $88.25. That's that 5-month low. So 88 has proved to be good support for oil so far. After that, perhaps $85, the psychological level. Then we've got highs for July so far, up at $100.70, or the 19th of July high, I should say. It has been much higher. It got almost as high as $110 at the beginning of July. So 100 to 110 is a bit of a barrier on the upside, could also be a target if we're looking for a bounce back from here. So as usual, enough talk about the numbers. Let's jump onto the platform and see what the market's been doing and what the trade might be. So here's the move in oil over the last 6 weeks or so. So it got as high as 121 in June, and it's traded as low as 88.28 in July. It's a big move. You know, that's a what's that? A $33 move or something. So 25% plus move off those highs. So big fall. The trend is still down for oil. But before we get into all of that, let's take a look at the RSI down here. We do have this thing building up that I always like to try and highlight, and it's bullish divergence. So it can suggest that perhaps the trend you're following is running out of steam. And we've got it really since June of last year. June. So the market hits a low, trades lower again. But look at the RSI, it's making higher lows. So it can be a suggestion, like I say, perhaps we're gearing up for a reversal. So for me, that's the interesting thing from the RSI at the moment, this idea of divergence. We last had it, we had bearish divergence up the top here in May, where the market trades to a high, pushes a little bit higher into June, but the RSI has made a lower high. So it worked well that time round. Let's see what happens. So for me, that's one of the reasons I'm thinking about buying. Okay, if we take this chart out, the other reason is, of course, the big trend. The big trend is up, still up from the April lows. Trend lines coming in around $80 or thereabouts. The better trade here for me, if I was a buyer, is to wait and be patient and wait for this downtrend to break, for this correction we've been in since beginning of June to break. But because I always like to get a trade on these videos, I'm going to buy it now. I just got to figure out where to put my stop loss. But of course, you could go short because that trend is still down. So there's definitely, from a short-term point of view, there's definitely an argument of still looking to be a seller of rallies in oil. You know, if we got it rallied up towards $100, perhaps look to go short with this trend, which is perhaps a bit clearer on the hourly chart. Let me show you what I mean. There we go. So that's the trend off those June highs, and we're still in that trend. So for me, if it did push up near 100 off the hourly chart, perfectly valid to go short. But for me, what I'm going with is what's happening on the daily chart. Big trend is up. We've made a low at $88. So that was the lowest since Feb of this year. So for me, I'm going to be a buyer. The closest I want my stop is the other side of 88. If the market breaks below there, then my idea of a bottom in this bullish divergence is clearly perhaps a bit wrong. So, but oil's a volatile market, so perhaps I need to give it a bit of room. So I'll go 86 for a stop. So I'm a buyer now where it's trading 95.58. Stop at 86. Looking to see, can it claw its way back perhaps to where it was late June, early July, sort of 108, 112. Let's get the trade on. Okay, I'm ready to go. So the market is trading at $95.58 or thereabouts. It's just jumped. I'd like to buy 38 barrels where the price is now. And I'm going to put a stop loss in at $86. And my risk, if I get stopped out, my risk is about £300. Let's click on buy and send that trade through. There we go. So I bought 38 crude at $95.60. And it's just seeing, does this 88 end up being an important short-term base? And it breaks out of this correction it's been in. I'm going with a longer-term trend, but the trend over the last month is still down. So let's see. But I think it's a really interesting market to watch this week, given everything that's going on, the US interest rate decision. Let's see if we see oil stage a bit of a recovery from here. That's it for this update from me in oil. Rarely a dull market, the price of oil. Let's see if it can make a base here and perhaps have a look at those early July highs up at $110 a barrel. See how it works out. Stops in place. Just leave it now and see what happens. But we'll come back. We'll do an update. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.